Hello traders. Today is April 1st, 2025. Thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Muhammad Azim from Traders United. Okay, let us start today's session. Just disclaimer. Please take the time to read important rules for webinar attendees. House rules. Let me start by sharing a little information about myself. I am a certified Elliott Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott Wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the main topics that we are going to cover inside today's webinar. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. Okay, let's start with the consumer price index, and then I'm also going to talk about core PCE price index. Okay, what is CPI, Consumer Price Index YOY in UK? And it actually affected the GBPUSD currency pair. The Consumer Price Index CPI year over year, YOY means year over year, measures the annual change in the average price of a basket of consumer goods and services. It is a It is a key indicator of inflation trends and reflects the cost of living in the UK. The Bank of England BOE closely monitors CPI data as higher inflation may lead to interest rate hikes, strengthening the British pound. Conversely, lower inflation could signal economic weakness, increasing the likelihood of rate cuts, which may weaken the British pound. Now, on March 26th, the report results are as follows. The previous number was 3.0%. The forecast was 3.0%, but the actual number came out at 2.8%. Now, the market expected inflation to remain steady at 3%, but the actual figure came in lower than expected at 2.8%. This indicates that inflationary pressure are cooling, which has had an immediate impact on GBP USD currency pair. Now, the impact on British pound versus US dollar and the market reaction is that since CPI was lower than expected, People were expecting 3.0%, and the actual number came at 2.8%. The market reacted as follows: that traders adjusted their expectations for future Bank of England policy, increasing speculation that rate cuts could come soon than previously anticipated. A dovish outlook for monetary policy weakened the British pound as lower inflation reduces the need for further rate hikes. GBPUSD dropped. Let me show you the chart of GBPUSD currency pair. So over here, this is the GBPUSD currency pair, and if I go over to a daily time frame, delete all of this. See, we got the drop in price section of GBPUSD currency pair. So it dropped lower, reflecting bearish sentiment towards the pound in response to slowing inflation. The overall analysis is that the CPI report showed that inflation cooled more than expected, reducing pressure on the Bank of England to maintain high interest rates. As a result, the market is now pricing in the possibility of earlier rate cuts, leading to GBP weakness and a decline in GBP USD. So overall, the summary or the conclusion is that the weaker than expected CPI 2.8% resulted in GBP USD currency pair moving lower as traders reassesses the likelihood of the Bank of England adopting a more dovish stance. If inflation continues to decline, the pound may face further downside pressure in the coming months. Okay, next one is the core PCE price index. Now, what is the core PCE price index? M over M. M over M means month over month. It is just a short word or an abbreviation that I'm using over here. The core personal consumption expenditures PCE index month over month measures the monthly change in prices for goods and services excluding food and energy. It is the Federal Reserve's preferred inflation gauge, providing a clearer picture of underlying inflation trends. The Federal Reserve, the Fed, closely monitors core PCE data to assess inflationary pressures and guide monetary policy decisions. Higher than expected inflation could lead the Fed to maintain or increase interest rates, strengthening the US dollar. On the other hand, lower inflation may increase expectations of Fed rate cuts, so weakening the USD and supporting Euro USD upside. Now, we got the report back in March 2028. The previous number was 0.3%, the forecast was 0.3% as well, and the actual number we got is 0.4%. The market expected core PCE to remain at 0.3%, but the actual figure came in higher than expected at 0.4%. Despite this, Euro USD moved up. Let me show you the chart of Euro USD currency pair. Okay, and go over to the uh, daily time frame. So I was kind of expecting, based on the technical analysis, which I'm going to cover later, the Euro USD actually moved up. Okay, so on 28th we got a bullish trading day inside the daily time frame of Euro dollar currency pair. Okay, so despite the 0.4%, Euro USD moved up, indicating that traders may be focusing on factors beyond just inflation. So the impact on Euro USD and the market reaction is the single core PCE was higher than expected 0.4% as compared to 0.3% forecast, and the previous one was also 0.3%. So the market would typically anticipate that the stronger US dollar as persistent inflation could lead the Fed to delay rate cuts. A potential slowdown in Euro USD's upward movement due to expectations of tighter Fed policy. Now, the Euro USD it still moved up, suggesting that traders may be focusing on other dovish signals from the Fed, such as softer economic data or a shift in policy tone. The market could have already priced in the inflation increase, with investors anticipating that the Fed may still lean towards rate cuts later in the year 2025. So the risk assessment and the broader US dollar weakness could be driving Euro USD higher despite the inflation data. The overall analysis is the March 2000 to 2025 report, the core PC report showed that inflation was slightly hotter than expected at 0.4%, which should have strengthened the US dollar. However, the market reaction suggests that traders may be focusing more on Fed forward guidance and broader market sentiment, which led to Euro USD continuing its upward movement. So despite the conclusion is that despite the higher than expected core PC inflation, Euro USD moved up likely due to shifts in Fed expectations of broader market trends favoring the euro. This suggests that traders believe the Fed may still adopt a dovish approach in the coming months, keeping the US dollar under pressure. Okay, next one is the euro dollar and British pound. And let me go over to the chart of euro dollar. So my analysis was that euro is going to rise up a little bit more. It kind of missed that level. But overall, after this bullish pullback, I'm expecting the price action to drop all the way down to reach 1.0685 area, somewhere down over here. That's the expectation. So we will see how it goes. But the way I see price action is most probably going to move down lower. So that's the expectation. Let me go over to the objects list. Okay, to actually unselect this. Okay, next one is the British pound. GBPUSD, you can see the RSI went above the 70 level. I'm going to talk about RSI later. And but just to be on the safe side, we got actually the overbought reading with the RSI, and the GBPUSD currency pair actually started the drop. And it might actually breaks this low as well down over here. This is the support at 1.2860 level. So price action is most probably going to break this level. Next, we're going to cover some other pairs like the US dollar, Swiss franc. Okay, so let's go to the PowerPoint presentation. Releases. So on April 3rd, we are going to get the Switzerland, the CHF, so the USD Swiss franc, that's the currency looking at. Next one is the unemployment rate in Canada. And this report is this financial data report is going to be released on April 4th. Okay, so let's check out some more details about it. Um, so consumer price index CPI, um, M over M means month over month. The consumer price index CPI month over month measures the monthly change in the average price of a basket of consumer goods and services in Switzerland. It is a key indicator of inflation trends and helps assesses price stability and cost of living changes in the Swiss economy. The Swiss National Bank (SNB) closely monitors CPI data when making monetary policy decisions. Higher than expected inflation could lead the SNB to adopt a more hawkish stance, potentially strengthening the Swiss franc, Swiss CHF. Conversely, lower inflation may raise expectations of monetary easing, which could weaken the CHF, causing USD CHF to rise. Now, the April 3rd, 2025 report, the previous number was 0.1%. The forecast is 0.1%. The actual data did not release yet. The market expects inflation steady at 0.1%, but any deviation from this figure could trigger significant movement in USD CHF currency pair. So possible market impact on the USD CHF would be if the CPI is higher than expected, greater than 0.1%, the inflationary pressures may push the uh, SNB to maintain or tighten policies strengthening the CHF pair. So CHF USD CHF currency pair. So USD CHF may decline as a stronger Swiss franc against the United States dollar. Let me show you the chart of USD CHF currency pair. Let me go over here. 1 second. Let's take a look at this chart over here. USD CHF. Okay. So right now you can see the USD CHF. It's showing kind of a downtrend. That's what we are getting right now. Okay. You change the color to red. So right now price action is basically falling down if we do the simple technical analysis over here. But uh, if we do get uh, you know the CPI number comes higher than expected, then USD CHF may drop more. Well, it's already falling down. It's already in a downtrend. Now, market may react neutrally if the CPI matches the expectation of 0.1% as the data aligns with the forecast. In that particular scenario, the USD CHF could see limited movement unless other economic factors influence market sentiment. And if CPI comes lower than expected 0.1%, it means lower inflation may signal economic weakness, increasing speculation of more dovish SNB policy. This could weaken the CHF, pushing USD CHF higher. So it is possible that maybe on a short-term basis, we might get a bullish leg in price action of USD CHF currency pair just temporarily advance towards the falling trend line. Okay, so the overall analysis is the April 3rd CPI report will provide insights into Switzerland's inflation trends and potential SNB policy adjustments. If inflation surprises to the upside, CHF could strengthen, leading to a lower USD CHF. However, if inflation is weaker than expected, CHF may weaken, allowing USD CHF to rise. So the conclusion is market participants will closely watch the Swiss franc and the Swiss CPI data, as it could impact SNB's monetary stance and drive USD CHF movements. A higher than expected CPI may lead to CHF strength, while a lower CPI print could weaken CHF, supporting a more higher move in USD CHF currency pair. Next one is the unemployment rate. Now, what is the unemployment rate? Let's talk about it for a second. The unemployment rate measures the percentage of unemployed individuals actively seeking work in Canada's labor force. It serves as a key economic indicator reflecting the strength of the job market and the overall health of the economy. The Bank of Canada (BOC) closely monitors labor market data, as a strong employment report may support tighter monetary policy, strengthening the Canadian dollar. So conversely, a weaker labor market could lead to monetary easing, potentially weakening CAD and pushing USD CAD higher. Now, the report that we are going to get on April 4th is last time the previous number was 6.6%, forecast is 6.7%, and the actual data did not release yet, but it is going to be released on April 4th. The market expects the unemployment rate to increase slightly to 6.7%, but any surprises in the actual data could trigger significant movement in USD CAD currency pair. So the possible market impact on USD CAD would be if the unemployment rate is lower than expected, the 6.7%, A stronger labor market suggests economic resilience, reducing expectations for Bank of Canada to rate cuts. So CAD may strengthen, leading to a drop in USD CAD. Now let me show you the chart of USD CAD as well. Let's take a look at USD CAD. Okay, so CAD may strengthen, leading to a drop in USD CAD, but right now USD CAD is going up. So the way I see market is probably going to create a pullback over here, okay, and then it's going to drop. So we will see how the numbers are going to actually appear and the market reaction. If the unemployment rate matches the expectation, which is 6.7%, the market may interpret the result as neutral, leading to limited impact on USD CAD. Now, any movement may depend on broader market sentiment and Bank of Canada policy outlook. If the unemployment rate is higher than expected, 6.7%, a weaker job market could indicate economic slowdown, increasing speculation of monetary easing by the Bank of Canada. The USD CAD could rise as the Canadian dollar weakens against the United States dollar. So the overall analysis is that uh, the April 4th unemployment report of Canada will provide key insights into Canada's labor market health and influence Bank of Canada monetary policy expectations. A lower than expected unemployment rate may strengthen Canada, leading to a drop in USD CAD. However, if unemployment rises beyond forecast, USD CAD may move higher as traders price in potential Bank of Canada rate cuts. So the conclusion is market participants will closely watch the Canadian unemployment data, as it could impact Bank of Canada policy decisions and drive USD CAD movements. A stronger labor market could boost uh, CAD, pushing USD CAD currency pair lower, while higher unemployment could weaken CAD, which means USD CAD is going to lift, it's going to rise up. Okay, next let's take a look at current week global market trends for the euro dollar, USD Swiss franc, US dollar versus Canadian dollar, and the spot gold. Let's start with the euro dollar currency pair. Okay, here is a chart of euro USD currency pair. Now, based on a simple technical analysis, you can see I have drawn these red color arrows over here, and they're basically representing the resistance level, and this means sellers are aggressively selling at or around 1.0938 price level, and due to this reason market started the drop. And if I zoom in a little bit, you can see that we're getting a bearish candlestick inside the daily time frame of euro dollar currency pair. Now if I show you a smaller chart of euro dollar currency pair, let's go to a 1 hour time frame, and here's the template. Price action actually managed to breaks below the yesterday's low right over here, and we even got a close below this level in a 1 hour time frame, and now market is here trying to bounce back up over here. We might consider this as a false break to the downside if price action does keep rising up on an intraday basis. But this was a nice drop around 1.0777 area. Now, if you check out the daily time frame, basically what's going on is that this is kind of a midpoint or or a median line where market is hovering around and spending most of the time at or around 1.0807 area. You can, if you check out the historical data, somewhere over here we got a reversal in market, over here we got the same story. So we got the drop in price action, and now market is retesting the same level. It's actually below this level, but it could go back up again. So the point is, the way I see, euro dollar is most probably going to drop to the next level at 1.0685 area. Next one, let's take a look at the US dollar Swiss franc currency pair. Okay, USD CHF. Now, if euro dollar is going to drop, the chances are USD CHF currency pair is going to show us some bullish price action. We do have a support level down over here. Let me show you. We have the support over here at 0.8735 level, and then check out and go back in time, we'll notice that this is the area which basically provided the support. Okay, right over here. Okay, so you can see the level. So it's quite possible that USD Swiss franc, it might try to drop and test the support level at 0.8738. However, if you check out the euro, if euro is going to is going to resume the downward price action, it's going to drop. If that's going to happen, the chances are USD CHF is most probably going to rise up to test the first bearish trend line over here. Okay, so that looks quite possible. Next, let's take a look at US dollar versus Canadian dollar currency pair, the USD CAD currency pair. Okay, this is the chart of USD CAD currency pair, and right now USD CAD actually trying to uh, rise up over here. We have the support over here at 1.4258 price level, and price action is probably going to rise up more. Uh, if I move this one down over here, this is the area which is basically providing nice resistance. So if price action is going to retest this level, let me tell you the exact value, 1.4517 area, we're probably going to find aggressive sellers up there at 1.4517 area inside USD CAD currency pair. If you take a look at a 1 hour time frame of USD CAD, go to Forex USD CAD. Let me change the template. Okay, and so right now this is the yesterday's high, and we got a breakout above the yesterday's high. We got the close, then a pullback, and now market is again testing and trying to break higher the yesterday's high. So the way I see USD CAD currency pair actually looks bullish. Okay, and the chances are price action is most likely going to rise up in coming trading days in USD CAD currency pair. Next one is the spot gold. Okay, let's take a look at spot gold chart over here. Now, last time when I was doing the analysis, I talked about two bullish trend channels in spot gold, and down over here we have our base channel. Let me change the and adjust the trend lines. Okay, this is our basically, this is called the base channel. So blue lines, this is the base channel, and within the base channel we got a short-term intermediate trend channel in green color, and we got a break to the downside, and then after that price action actually resumed the uptrend. Now let me go back over here, and I'm going to redraw this channel. So you can take this one over here and here. So we got this bullish trend channel inside spot gold, and market is probably going to push higher. It's most likely going to rise up more. That's the way I see inside spot gold. XAUUSD is the symbol. Okay. Okay, so these are the insights, and if you have any questions, feel free to type inside the chat box, and I will be happy to answer your questions. So what we have learned today, we talked about the consumer price index related to Switzerland, the CHF, and we discussed about the unemployment rate. Then I also covered the USD CAD. I also covered the euro dollar, USD CHF, USD CAD, and spot gold. These are the assets to watch out for profits. Okay, so what you should do next? Well, you can stay tuned for the schedule of next week's trading webinar. You can subscribe to our social media pages. If you want to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. So I would like to say thank you for hanging around. See you at the next trading webinar on Tuesday, April 8th, 2025. So that's it for the time being from my side. Have a nice day and bye-bye.